Thanks for joining us here on 9 News Plus. I'm Chris Bianchi, and while we all know the real estate market is cooling somewhat quickly across the Denver metro area, at least maybe not as crazy as things were back in 2020 and 2021, but just how quickly are those prices falling, and how much are those rising interest rates affecting things, including here in Denver and across Colorado? Kelly Moye from the Colorado Association of Realtors joins us now for some insight on the rapidly changing Denver and Colorado real estate market. Kelly, thanks for joining us. And Kelly, am I right in saying that things are changing quickly, and how would you assess things overall?
Absolutely. And hi, Chris. And rapidly is the perfect word because things were so different in April of this year compared to where they are now, radically different. And I really, in 30 years of being in real estate, I have never seen a change happen so quickly. And that's because the interest rate changes happened so quickly. What is typical of an interest rate change would be a quarter point here or there, maybe once a year. All of a sudden, we are several points within just the last couple months, which really affected buyers' ability to purchase.
And just how much has that affected things here in Denver and across Colorado? What sorts of statistics might we be seeing to account for that?
Well, for example, a lot of buyers have been pushed out of the market. What they thought they could afford, they now can't. And maybe what's in their market price point may not be something they want. And so they've either decided to move elsewhere or rent, hold off in hopes that it gets better. Although I would tell them I wouldn't hold my breath on that. But there is always a group of people that gets pushed out of the market when this kind of change happens. And I think what we're seeing right now is a lot of the buyer demand has decreased, and therefore the inventory has gone up just a little bit, not that much, but enough to make a dent in our market. And we're seeing it in our prices, and we're seeing it days on the market as well.
Now, my understanding, and this may be anecdotal here, is that a lot of the focus tends to be on single family homes. Is the market different for apartments, condos, duplexes, things like that in Denver?
Yeah, that's a great question. It is a little bit different, but we're still seeing the same trends in those attached dwellings, because a lot of times people, let's say they were able to afford a $450,000 condo when the rates were 4%. Well, now as the rates are 6.5%, that $450,000 now just turned into 325. And so that may not allow them to get into the market. So they're experiencing the same type of issue as we are seeing in single family homes. But that being said, attached dwellings tend to be more affordable and are a little bit easier to get into than single family houses.
Well, no doubt about that. I guess one thing that's fascinating to me is that the average price of a detached home, single family home, ticked up slightly in Denver last month, despite this overall cooling market. What is with that? Is this kind of high priced houses that are maybe ticking up that average a little bit?
That's a great question. What is with it is that if you really look at the statistics without putting the story behind it for the last year, we still have very low inventory compared to the demand of who wants to live here in Colorado and who wants to get into this market. So when you have low inventory, you are going to have those prices go up a little bit over time. But last year, our prices went up 25%, which was unsustainable and unbelievable. This year, we're hovering right around 10%. So it feels like the prices are going down, but really what they are is going up much slower than what they were before.
So again, continuing that theme, I suppose, of things just getting gradually a bit more normal. Kind of speaking of which, a new report out from the Denver Metro Association of Realtors says that the metro area's housing is approaching a balanced market. Not there yet. They said approaching a balanced market for the first time in nearly 16 years. Would you agree with that assessment? And what's behind perhaps that assessment from the Denver Metro Association of Realtors?
Yeah. Well, I think what what they're observing is homes staying on the market longer. And that's usually a good way to assess where we are, whether we're in a balanced market, a buyer's market, or a seller's market. So last month, houses were selling on an average of 11 days. That was in the month of August. Okay, so September, those numbers have just come in, and now that days on the market is 26. So in essence, that's doubled. So we can see homes are taking longer to sell. But if you really look at what a balanced market is, that would be 5 to 6 months on the market, would indicate a balanced market. So we're still very much in a strong real estate market, but I see what they're trying to say is that it may be approaching something more like a balanced market, because when you see month after month, the days on the markets actually double, then you're seeing a trend. And it'll be interesting to see what happens for October and November. Of course, taking into account seasonality, because things tend to slow down in the fall anyway. But if we continue on this trend, we will approach a balanced market, but we are not there yet.
So I guess maybe to sum this up a little bit, how should both buyers and sellers be thinking about the current market and climate?
Oh, that's a good question. Okay, let's say you're a seller and you need to sell now, and you want to sell now and you're ready to move. What you need to do is price it really properly. And in order to do that, you can use sales from, say, the last 2 or 3 months, and then you literally have to skip June to January, because that market was a totally different market. You can even look back at sales from November and December of 2021, and you will likely price your home according to today's market. But if you start pricing to your neighbor who sold in April, you're going to be too high. So the trick is, as a seller, is to make sure that you price it right and that it looks great, and it should sell in under a month. Absolutely no problem. This is a great market to sell in. You just need to be realistic. The other thing is, I think sellers got used to multiple offers and sales price to list price being over what they were asking. And we're just not seeing that anymore. I mean, there's a handful of times where you'll see a bidding war situation, but the norm now is the sellers are taking a little bit off the price. They are paying some seller concessions, meaning that they're buying down the interest rate for the buyer to help them purchase that house. These are things we wouldn't have had to do 6 months ago, but sellers need to do now. So they need to know, if they want to sell, they need to play the game of where the market is today. And then for buyers, I would say, for buyers, go out and enjoy it. Oh my goodness. I mean, I know the rates are higher, a given, but there's very little competition out there for you right now. So you're out looking at houses and you're no longer stumbling over the next buyer as your 15-minute window closes to see the house. You've got a little time. You've got an opportunity to negotiate. Maybe ask that seller to help pay your rate down to make it in. Because as Compass founder Robert Refkin would say, he said this morning, which was, you date the rate and you marry the price. So if you're a buyer, use this opportunity of lower competition and maybe some seller motivation to get into the market. Maybe you take a higher rate than you'd like, refinance it later. But the point is, get into the market while you can before our spring hits and things might look different.
Question about that. So if you date the rate and you marry the house or the home, whatever you're buying, the price, yes.
Right.
Does that apply for so many people who got into the market with a 3% or under interest rate? Would you almost kind of marry both because it's unrealistic, or it's very unlikely that maybe we'll get down to 3% interest rates again?
That's a great question. I mean, if you own a house right now and your interest rate is 3%, that's one of the challenges, is that it's really hard, even if you want to move, to think about taking on a 6.5% rate when you're sitting on one that's 3. So in that case, you married the rate, didn't you? But the idea being is don't marry the rate. If you want to move or need to move, go ahead and move, and the rates will move up and down, and they historically always have. And you can refinance, but you can't change the price at which you purchase that property. So if there's a window here in the fall and the winter where buyers can really start to get some good deals and actually have an opportunity to find something they like without competing against so many others, then the advice would be, take it.
Well, great advice as always. Kelly Moye from the Colorado Association of Realtors. Thanks so much for taking a few minutes of your time to lend us your expertise on the ever-changing Colorado and Denver real estate market. Thanks for your time.
Yeah, absolutely. Thanks, Chris.